Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. So we will be walking through their latest news updates in regards to Palantir Technologies, and then after that, we're going to be going over their latest projections regarding their earnings report, which will be released on February 13th. So we're going to decide if this is going to be a positive bullish earnings report or a bearish negative earnings report. We'll also be going over some of their technicals on where their resistance is as well as where their support levels are. After that, we're going to move on and talk about how various analysts have either reiterated or potentially upgraded or downgraded Palantir Technologies over the last few months. And then lastly, we're going to talk about why smart money is buying up more of Palantir Technologies. So if you want a greater number of news updates from me regarding Palantir Technologies, remember to go and annihilate that like button, subscribe if you are new, comment your thoughts down below about where you think the PLTR share price is headed as we get closer to their earnings report, and I would love to hear your predictions and projections about where you see this company in the future. But without further ado, let's just dive right into it. If you're not familiar with this company, Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government clients. Lately, Palantir made a very interesting move after their amazing event which they had earlier this week, and that originally caused the overall share price to skyrocket. However, after the event, some things came out about Palantir's management being mixed up, which has caused investors to be very anxious. And we all know that Wall Street hates uncertainty. And that's exactly what we're getting with Palantir right now, which is why their overall share price is dropping. Management is deciding to shake up Palantir Technologies' overall board right before their earnings report, which is causing quite the stir among investors on whether or not you should buy more or sell before this upcoming earnings report. This means the uncertainty among management is causing the shares to go even lower because investors do not like the uncertainty about why Palantir Technologies is trying to do this right before an earnings report. And here's exactly what's happening for their overall management. In an overnight regulatory filing, the company actually disclosed back on January 29th that the chief accounting officer announced to step down as soon as Palantir files their 10-K form. And essentially, the 10-K form allows investors to look in to Palantir's overall financials regarding the overall company's financial health. And that's something that I personally decide to look into. I don't normally report on what I find in 10-K forms as long as it's not something too mischievous, because overall it's pretty boring. But the exciting news is in the details, because we also know that the current controller, named Heather Planishek, will actually succeed and become the new chief accounting officer, or CAO. On top of that, Palantir also announced that their current chief operating officer was going to be named their new chief technology officer, and their current chief legal officer will be named the new chief revenue officer, which is quite interesting. Now, on the surface level, there is nothing to suggest that Palantir is doing something quote-unquote sinister or something very bad will happen in their fourth quarter results. I just think that this is just not good timing for Palantir to shake up their management like this, according to their recent filing. But investors should be curious regarding the current forecasts of what Palantir will bring in regards to their overall revenue and earnings per share on February 13th. Right now, no eyebrows are being raised, but I think investors should be quite cautious around this, especially after a Citigroup analyst actually noted in a call that these changes are quote-unquote unusual and curious in timing, end quote. So right now, let's go over and talk about their overall earnings and revenue projections. Well, starting off, according to Yahoo Finance, the average earnings estimate for Palantir's quarter 4 stands at 3 cents per share, while they are estimated to bring in around $502.25 million worth of revenue. So their EPS will be 3 cents on the positive side, while their revenue will be over $500 million. And that would actually show that the company is improving quite dramatically, which should drive the overall share price up, and it could give us positive expectations for the next quarterly earnings report. Right now, overall, the market as well as analysts seem pretty bullish on this fast-coming earnings report report, but beyond that, it seems that some analysts are still skeptical about their current share price because they believe it's overvalued right now. And I actually agree with them. I do think that the share price is somewhat overvalued, but the upcoming earnings report, according to this article at least, seems pretty bullish and positive. That's why this article's author believes that Palantir will end up beating Wall Street's consensus estimates for their EPS as well as their revenue on February 13th. Now, with that said, let's talk about the current share price. Right now, Palantir Technologies shares are trading for around $8.53. This means currently their resistance levels are between $9 to $10 and their support levels are between $6 to $5. I honestly would take $5 as their support level and $9 as their resistance level. This means that it's unlikely that Palantir will fall below $5 considering how much volume and investors are holding at that price point. So overall, Palantir Technologies should end up giving us a pretty positive earnings report on February 13th, which hopefully will increase their overall share price. Right now, there's no concrete evidence that Palantir Technologies is doing anything but being a high performer. Now, we are going to get a lot of information in this upcoming earnings report, which will discuss why Palantir decided to shake up their management right before something that's very important, such as right after a news event and an overall catalyst describing Palantir's future plans, as well as before an earnings report. That timing is extremely unfortunate. But overall, many investors don't believe there are going to be any unwelcome surprises on the horizon for this company. In the meantime, the PLTR shares are going to be quite volatile, especially after their earnings report. But we have to remember that this company has very impressive technology in terms of data analytics and AI technology. And this means that investors should be very confident in this company's future growth trajectory. But like I've said before, don't over-allocate yourself to this single risky growth company. You need to practice proper risk management and don't put all of your eggs in one basket, because if you drop the basket, the egg is going to break. If anything, it's much better and much smarter to have multiple eggs in multiple baskets. And that goes to show you that you should be investing into a plethora of strong performing companies and stocks, not just one. But that's not all. Recently, we've also seen some analysts get a little antsy around this stock lately, and we're going to go all the way back to when Morgan Stanley maintained a pretty decent price target on this company. So we can see an analyst from Morgan Stanley originally had an $11 price target for this company, and then they lowered it to a $10 price target. Later, we saw other analysts from other institutions lower their $20 price target down to a $15 price target, and the trend continued with RBC Capital also lowering their $6 price target down to a $5 price target. But the interesting about this is that back in the day, the Citigroup analyst who thinks that there is something up with this random management switch right before an earnings report originally lowered his price prediction from $6 down to $5, but just recently, literally on February 3rd, this same analyst reiterated his rating for this company, and he gave it a $5 price target by reiterating that. Again, Morgan Stanley even readjusted their price target from originally $11 down to $10, and then they readjusted it again, particularly this analyst, who gave it a $10 price target and then lowered it again to $8. Following all of these downgrades, one of the most bearish negative analysts from Wolf Research reiterated a $4.50 price target from this company, while Jefferies lowered their price target as well from $9 down to $7.50. But overall, we can see that the Citigroup analyst has a $5 price target, the Deutsche Bank analyst has a $6 price target, and Mizuho reiterated a $7 price target. So what can we take away from this? Well, the highest end price target that we could find is from Raymond James, which gave it a $15 price target, and this comes from a pretty good analyst, which says that there is upside left in this overall stock. Now, the most bearish negative analyst goes as low as $4.50. I like to average the low and the high end to get a nice average price target of around $10, but $10 still would put this company too much at a premium. So maybe a price target between $5 and $7 would be the most realistic. However, for me, I am a long-term investor, and I believe this company will be well over $15 to $20 in the next half decade or the next decade, because that's how long I'm planning to own this company. But until then, this company will continuously be trading at single digits until they land massive contracts. As of right now, their stock-based compensation is really holding the company back from profitability, which they are currently projected to achieve by the end of 2024. However, if they stopped at their stock-based compensation, they could literally become profitable right now. But in general, analysts do not seem very bullish on this overall company, except with the exception from an analyst from Raymond James. So I am looking forward to their upcoming earnings report because this could literally prove these analysts wrong, forcing them to increase their overall price targets. But that's not all. We also have some smart money investing into Palantir Technologies. For instance, we know the New York-based investment firm named Renaissance Technologies is a leading shareholder in Palantir Technologies, to where this very successful hedge fund owns 33 million shares worth well over $260 million. So clearly, they are very bullish on the future of Palantir Technologies. They're not just going to hold this company for the next year or two, they have my perspective of holding for the next 5 to 10 years, regardless about what the company does in the short term, because according to current financial metrics, yes, they are trading at a premium and they are overvalued, which means the share price could fall back down and then eventually rise back up from the ashes in the next couple of years. Depending on what catalysts come up, of course. But what I really want to talk about right now is a new partnership that they landed on January 26th that no one really talked about, which was with a pharmaceutical drug distributor called Cardinal Health. And they announced a partnership with Palantir Technologies to essentially provide data-driven supply chain solutions for their various drugs. And Palantir really is being utilized in the overall financial space as well as healthcare. So that's very positive news that we're receiving from Palantir Technologies overall. In the end, I tried to give a balanced view of what analysts think and what their upcoming earnings report has for us, which should be pretty positive. We also went over some news updates of them changing up their management structure, as well as them landing a fantastic partnership with Cardinal Health. Lastly, we know that some smart money, particularly the hedge fund Renaissance Technologies, is also a heavy investor into this overall company because they have a long-term investment. So I'd love to hear your thoughts. Remember to go and smash that like button for more Palantir news videos, and I will see you in the next YT video.